Will this be Europe's last great property bubble?
Hello and welcome to today's Daily Blitz. Now in today's video we'll be looking at a housing bubble that has begun to inflate quite rapidly in the centre of Europe. Most people think of the housing bubble back in 2008 as being sort of the one thing that will never happen again due to the regulations that were introduced. But of course this then there was a similar fallout that occurred in Spain and in Ireland just a couple of years after. But it seems like nobody has learned from this, and in fact in Berlin property prices are going through the roof. Now, Nikolai, why exactly do you think that this is happening?
It's very simple. Germany has 0% interest rates for an economy that was doing extremely well. And if you have that, you get a property bubble for the simple reason that property is financed with debt. So if debt is cheap, people bid up house prices.
Right. And this appears to be going, it's almost exponential in
That's
Berlin right now, right?
Well, across Germany as a whole as well. So if you look at the chart on your screen now, you can see there's an exponential shape to the German house price index. And recently it's gotten completely out of control, with house prices spiking by one of the measures 9% in a quarter. And that's not an annualized rate. So it's gone completely out of control. If you spoke German, we'd be showing you the headlines that I read every morning about how out of control house prices are, about how the government needs to do something. And there has been political involvement to try and constrain house prices. And all of this is basically getting out of control, just like it did in Spain before 2007 and Ireland before 2007.
So you said there were some political restraints that have been imposed. What were we talking about? Rent control? Or?
Yeah, they've tried a few different things in a few different cities, and each of those have been legally challenged and constitutionally challenged. The big issue in Germany seems to be that home ownership rates are extremely low compared to other countries around the world. And so there's less people participating in the boom, and rents are more of a political issue. So the focus has been on rents specifically. Now, if you're financing your property at 0% interest rates, you're not too worried about the rental income compared to when it's higher interest rates. So all of this is playing out in different ways to what we're used to in Anglo-Saxon societies, such as Australia and the UK. But it's still there, and it's still in the top headlines each day in German newspapers.
Now, you've mentioned to me before that one of the reasons why the rise in the property market in Germany is quite so extreme is due to the fact that property is not tradable, and the way that interacts with other kinds of tradable assets. Could you expand on that?
Yeah, so this is something fairly new to the world because of the Eurozone, because it's a currency union. So historically, low interest rates and too much monetary support for the economy would have raised consumer price index. So you'd have inflation of the sort that you get at the supermarket. But because the Eurozone is a customs union, that sort of inflation can't happen in the same way. So you've got, for example, Italy's economy underperforming, and Ireland's and Germany's performing very well. But because they trade in consumer goods, the consumer price index isn't where the inflation shows up. The inflation shows up in things that cannot be traded, non-tradable goods. And property is the obvious example of that. So a house can't be moved from Germany to Italy or from Italy to Germany to try and readjust the prices to make them even again. Instead, you've got 0% interest rates in Germany for an economy that's booming. Therefore, the one good that can't be moved to Italy goes up in price, house prices, and in Italy, they stay depressed. So that's why when you have a currency union, you get housing bubbles.
So George Soros famously said that if you see a bubble, you should buy it, simply because you can make so much money in the inflation period before it bursts. So if you can see if you spot a bubble early, then you could make out like a bandit, really. Do you think that's the case with Germany?
Well, I've been recommending German house price related investments since about 2012, since working in Australia way back then. And in our October 2018 issue, we wrote about this as well, how to profit from the last great property boom. And yes, the house prices are still rising incredibly fast right now, and they're still quite low compared to a lot of Europe. So the countries around Germany. That's because Germany didn't have a house price bubble in 2003. Or starting in 2003. So it is still a good investment in my view. The point is more that it's a ticking time bomb, that something is going to go badly wrong here at some point in the future, just as it did in Spain, in Ireland, and most of Europe, in fact, that these 0% interest rates are leading to exactly the same repeat as we had before going into the financial crisis.
So what exactly makes this the last great property bubble?
Well, I'm talking about Europe specifically in that designation as Europe's last great property bubble. And it's all about the idea that this sort of property bubble and bust cycle that we've gone through it twice now, going into 2007 and since then, It's all about being in a eurozone, in a common currency, sharing a common currency. Because you get one interest rate that applies for the whole currency area, in some places that interest rate is too high, and in some places it's too low. And where it's too low, you get a property bubble. And where it's too high, you get a property bust. And because the assets that are non-tradable, so the homes, are the ones affected by this interest rate problem, you get this cycle of booms and busts constantly. And eventually people are going to realize this, they're going to wake up to it, and they're not going to accept that it's normal to have your house price boom one year and bust the next. And I think one of the repercussions will be basically a campaign to end the euro.
Right, well there you have it folks. That sums up today's Daily Blitz. Hope you enjoyed it. Be sure to tune in for the next one.